When your insurance payment is more than your car payment, that is when we have a problem. It's not just interest rates that we have to worry about anymore, it is also insurance costs. And with higher insurance costs, it is pushing people out of California faster than we could possibly imagine. What's up, guys? It is Chris Conlon, your home lending guru, coming to you out of California. And today we are going to break down a hot topic of insurance and the rising costs, just not here in California, but in the entire nation. Now, before we get started, I want you to do me a huge favor. I want you to hit that like button. I want you to hit that subscribe button, and I want you to hit that little bell for notifications because we are bringing all the hot topics to you as soon as they come out. Now, I really want this channel to be a one-stop shop for you to come back to when it comes to anything real estate and anything home lending. I want to be your guy, and before we get into it, let's break this down. Let's talk about what's happening with insurance right this very second across the nation. Now, think about the large national carriers when it comes to insurance. Now, State Farm is a household name that we all know. We love those commercials, right? State Farm just got approved for a 17% rate increase. And what's even more crazy about that, they were actually asking for 22%. Now, when a company as large as State Farm is asking for this has to tell you something. This is not just about raising premiums, this is true panic prevention. So what's even crazier is renters are not even safe. So for a long time, it was all about the homeowners, and renters had this policy where it was relatively pretty cheap. Renters insurance used to be like $50 to $60-ish a month. Now this is what is absolutely insane. So for a renter, if it is a non-house, meaning a condo or a townhome, the increases are up to 15%. Imagine this, you are trying to save up for a down payment to buy a house and your rent keeps going up and now you've got rising insurance costs. I am truly feeling for our first-time home buyers, or quite honestly, anyone that wants to buy a house in general. Now on the home side, it is actually up to 38%, which is astronomical, or can be. This is absolutely insane, ludicrous when I actually break the numbers down in my head, but I'm gonna do it for you guys at home. Now, if we see an increase to a standard insurance policy that was once $2,000 and it increases 38%, now we're at $2,750. That's $750 extra per year in terms of insurance. That is literally as much as 1 or 2 car payments just in insurance. To put this all into perspective, I really want you to understand why this is actually happening. So in the insurance world, we had a surplus, meaning that the insurance companies had a savings account with extra funds in it. And when I say extra, we were at like $2.6 billion. That is a ton of money and a ton of surplus when it comes to paying claims. Now, since we've had natural disasters, since we've seen insurance claims rise, that number has dwindled down to $620 million. Now, I know what you're thinking, that still sounds like a lot of money, but for a country as big as ours, that is not very much money at all. And the question then becomes, do we actually have enough? So imagine this, we have these crazy rains that we saw here in California yet again, and let's just say they are magnified higher than what they were before.
We've already seen street flooding and minor mudslides. The storm still has the potential to trigger very dangerous debris flows.
It has intensified, I'd say, within the last 20 minutes or so, and that plays into why forecasters are saying that this may be the worst of it.
Well, check out these new images from Southern California, where more than 45,000 people are under evacuation warnings due to heavy rain.
That roof leak that you've been not paying attention to, you start to see the water seeping in through the roof, and now you have a major water leak and your ceiling is coming in. I know it sounds drastic, but it does truly happen. All the money that we had in the surplus would go to pay for that roof, it would go to pay for that ceiling, and it would go to pay for all of the water damage. The scary part is if we get that savings account dwindled down, remember $620 million now, if there's not enough in those accounts for insurance companies to pull from, claims can't get fixed, and we've got some major problems. Now, this is how severe it is. We actually had a judge recommend that there should be a $400 million cash infusion into this insurance pool so we can get that surplus back up. That is a huge red flag that we should all be paying attention to. It's kind of like getting on CPR just to keep someone alive temporarily. Now remember, if we do actually have that happen, you better believe that insurance companies are going to continue to charge higher premiums to start filling up that account once again. Here's how this is impacting our day-to-day business when it comes to buying a home. For our homeowners, our potential homeowners, anyone that wants to buy a house, this is how it is affecting us on the day-to-day. Now, I see this in each one of our transactions when we structure this. So if you think about insurance premiums going up, we have to include that into a client's debt to income ratio. A very, very simple example is, let's say we have a house payment that is $3,000 a month and we have to add the insurance payment. Now, a typical policy, depending on the size of the home, depending on the size of the actual lot included, and also including where the location is, if it's next to brush fires or anything like that, it was about $200-ish per month for a single family. Now that same policy, we are seeing anywhere between $600 to $700 more expensive per month. Now, if that happens, that can blow out our approval, meaning that the client is now going from an approvable status into a decline status. This is affecting us on every single transaction. Majority of our clients that we are seeing are right on the edge of the 50% debt to income ratio that could be the max. With a higher insurance policy, it is killing your deal. Some homes are becoming uninsurable. Now, depending upon the location, depending on if it is close to a high fire zone, if it is somewhere that could potentially be flooded, there are insurance carriers that are literally pulling out of the market, and large, big, well-known names are pulling out. Now, yes, of course, there will always be insurance carriers to cover those homes, but at what cost? Now, when we look at this, and again, this is happening on every single transaction, we are seeing these premiums get to astronomical levels. As a lender, we do need to see an approved insurance policy before we close. Now, if you think that large companies are pulling out, now the pool of competition gets smaller and smaller and smaller, and there could truly be a monopoly when it comes to these insurance premium prices. Less competition is not always good for the borrower and for our clients. This is all adding up to some really, really weird market shifts. Now, if you think less qualified buyers out in the marketplace means less demand for homes, means a very, very tight marketplace when it comes to home buying. Now, when you think about this, if you think about less people out in the marketplace shopping for a home because of the insurance costs, even if rates go lower, it is going to be a moot point because you have higher insurance costs. Think about it like this. Think about all of the people that bought a home in the last 2 years that have a 7 on their interest rate. Now, we have been waiting for some relief when it comes to mortgage interest rates. Now, that same interest rate with a 7 in front of it, let's say we get down into the 5s, that would create some nice payment relief. But if we have higher costs on the insurance, that is going to negate the gains that we see from the lower interest rate. This just feels bad. From a lender's perspective, we now are hyper aware of insurance costs. So what used to be just a couple of $100 a month before, and we would just go with that for putting our numbers together, we are now calling insurance brokers, we're calling insurance companies, and we are asking the clients to get a real quote before we start even calculating anything when it comes to the payment for insurance. So what I've heard from friends in the industry is they are seeing these insurance premiums not be actually real deals when it gets to closing. Now, I want to paint the picture for you so you truly understand, but you go along the process, you find the dream home that you always wanted, you are extremely excited about buying that home, you get a quote from an insurance company, and you think you're getting ready to go to closing. You've got final loan approval, and the one last thing that we need is just that binded insurance policy. We get to the closing table, and we find out that we have a bad insurance quote, it's not fully underwritten, and that we can't close with that insurance policy premium. Now, that is setting up for a real disaster, and the last thing we want you to do is have a bad time or a hard time closing on that dream house of yours. Now more than ever, it is so important to have your team put together before you buy a home. And that team is going to consist of your agent, your real estate agent, your home lending guru like myself, or your insurance broker. Now, when we look at this team, this is going to make or break your transaction. Now, getting everybody in a collaborative type team is going to be what will set you apart in buying that home. Your agent finds the right home, I put the right loan together for you, and your insurance person is going to put the right policy that we know is going to close. So I can't harp on this enough. This is the most important thing, is to have that team built when you go to buy your home. I'm gonna break down the affordability gap here in California amongst some other states as well, just so you can see the comparison and what we're truly talking about. When we break the numbers down and we actually crunch them to the true numbers, yes, we do have an affordability issue here in California. But when we look to see what people make versus the cost of the home that they actually want to buy across the country, we really do have an affordability issue across the entire nation. Here in California, the average income just to buy a 3-bedroom house is over $200,000 per year. Now, our neighboring states, yes, they are more affordable, but you still have to make over $100,000 to afford that same home, more close to $140,000 a year. In California, the median or average income is about $125,000 per year. And in our neighboring states, Nevada and Arizona, it's about $75,000 to $80,000 per year. So to buy that 3-bedroom house that you want in California, you have to make almost double the amount just to afford that house. But if you really take a closer look and you look in those neighboring states where we think more affordability is, it's just about the same. So the question now becomes is it just California with the affordability issue, or are we having a true crisis when it comes to affordability across the entire nation? What we're starting to see is people trying to cheat the system or doing a real life affordability hack, meaning that they are getting a job in higher paying states like California and then moving over to Texas, Nevada, Arizona. You get the idea. Now, the idea is they can work from home. So they get a job in a high paying state like California, they move into a higher affordability state, and they work from home. But the question is, what happens when the employer, which we are starting to see now, asks you to come back to the office? So now with higher costs in terms of fuel or gas, higher food costs, higher costs of living, well, it's all adding up and going on to the consumer. So what do you do then? Is it still worth buying in California? And the answer is yes. There is still a ton of opportunity in California. Now, this is where working with the right team and working with a true pro is going to shine. There is a lot of different local opportunities. There's a lot of different local programs. There are things like down payment assistance. There are things like shared equity programs here specifically in California. So yes, there is a ton of opportunity. Buyers need to be more informed than ever. Now, this is not the time to go out on your own and trying to handle this all by yourself. Even strategies like going to the listing agent to represent you as a buyer's agent, there are things that can absolutely go wrong with that as well. Now, this is where you need to truly work with the pros to help you understand and guide you through buying a home in this marketplace. Again, there are a ton of opportunities. You just need to know the right places to look. So I really think recapping this entire video is the importance of finding the right team. Now, obviously we know the importance of a real estate agent helping you find the right property. Certainly you could go to Zillow, you could go to Redfin, you can do your due diligence and find the right home. But then when it comes to negotiating the right program and the right offer and structuring it properly, that's going to fall on your agent. Now, when it comes to finding the right loan officer, that is going to be ultra important. Quite honestly, with you finding the right home, you have to understand how you can truly afford this home. And there are so many different ways that we can structure a loan and different products that we can choose to make this more affordable. So we know the importance of a real estate agent. We know the importance of a lender. Now, with the insurance piece, this is kind of a new thing that we've really been working on in 2025. As we've seen wildfires in California, we've seen flooding across the nation, but with higher insurance premiums, this is truly where the insurance person is going to be the main component as well. We took for granted insurance being at $200 or a couple $100 a month, and now we're looking at some policies in the $1,000 a month range. So having the right insurance broker, having the right insurance person to structure those properly with the right policy is going to be a huge game changer for you if you want to buy a house in 2025. You guys, thank you so much for watching this entire video. I really, truly appreciate it. And when I've put this channel together, the main goal was to have a place that you can go back to, find the hottest topics and also the most relevant topics as well. That way you can go back to the channel, you can search it very easily, and you can get a really detailed answer but in really to easy understand terms. Now, I want you to do me a huge favor. I want you to hit that like button. That really helps the channel out. I want you to subscribe if you haven't already. And if you know anyone that's looking for a house or just likes this type of content that can learn something, please share this with them. That would be a huge compliment to me. And the other piece is, please hit that notification bell so that way you are up to speed. I put a lot of time and energy to come up with topics, and I also look at the comments down below to give me the inspiration, because you are really the ones that I want to serve. Now, with that being said, I hope that if you are still considering buying in California, I want you to know that there are a ton of opportunities. This is still a wonderful place to live and to buy and create some real equity over time. So thanks so much for watching, and I will hit you on the next one.